after it started on the road to creating a single market back in the late 50s and early 60s. It continues to be a very controversial policy area. That's something I think that would surprise a lot of people who maybe don't follow the EU or politics in general, that something like farming and agriculture could be controversial, but it undoubtedly is within the European Union, and particularly because there's a lot of money involved. And I think it's something that, at a certain level, a lot wider swath of people can relate to. I come from a farming family myself in rural America. Oftentimes, they have no idea what it is I'm doing, but I can start to talk about ag policy and about how ag policy works in Europe, and that's something that they get and they're very knowledgeable in, and it's sort of a way to communicate. I've certainly have had a lot of students that come from farming backgrounds and do have an interest in how this all works. And so it is something that they sort of latch onto. But then it's probably the best example of European integration as well, because um, prior to the EU, there were all sorts of different types of national policies about how farming worked. Some countries supported farmers more than others. Some countries had much more stringent regulations on agriculture. And within about 20 years of the European Economic Community in the late 50s being created, we had a almost completely unified agricultural policy at the European level. So it's something that matters a lot to many people, but yet everyone's been willing to go along with sort of being integrated and creating a new ag policy within the EU. So just a quick overview. If you're reading any textbook or any sort of scholarly work on the European Union and they're talking about it, in many instances you're going to actually just see the acronym CAP. And CAP has become the sort of shorthand for referring to agricultural policy. CAP stands for the Common Agricultural Policy. And it's, again, sort of its own entity that merits a lot of scholarly attention, and so that's the most common acronym. Probably the most noteworthy thing about CAP is that it has for a very long time been the largest percentage of the EU budget. And if we go back to the 1970s and 1980s, we were talking on the order sometimes of 50 to 60% in some years of the EU budget. So a massive percentage of it. As of about 5 to 10 years ago, it was down to right around 35 to 40%, and it continues to decline. And that's something we're going to talk about. But one of the biggest changes and continuing changes in ag policy is that the EU's just spending less money on it in general. But even today, it's still just barely, but even today, it is still the largest portion of the EU budget. So again, that's part of why it's so controversial and why it receives so much attention. But certainly, the amount of money being spent is beyond what we do in the United States. And third, because I'm not going to go into a lot of detail about it, but I think it's important to know this because it'll pertain to some of what we're talking about. It's important to agriculture policy more broadly. It's important to know about COPA, another acronym which stands for the Confederation of Professional Agricultural Organizations. COPA is the interest group or the union in some ways for farmers, but the interest group for farmers and agriculture in the European Union. It's the largest such group, not just the largest agricultural group, but the largest interest group, period. And I think many people that have focused on pluralism and interest groups within Brussels would argue that it's probably the most powerful. It certainly has a lot of money, it's got a lot of members, and it holds a lot of sway in Brussels. So COPA is something that we'll talk off and on about as we move through the lecture, but it's good to know what they are. Okay, why agriculture? Why look at this at all? Why is it important within Europe? Why does it merit study? There's been a fairly large body of theory that's focused just on this question. Why does the state devote so much attention to it? And what do scholars and students of the EU and politics more broadly have to learn from it? And there are a number of points that are made toward this. The first is that many people argue if you're looking at it from a purely sort of political economy perspective, that being what the state's role in the economy should be, there are arguments that agriculture, amongst other sectors or other industries, merits special attention. So there's a reason why the state should single agriculture out from the manufacturing industries, from different types of service industries, and give it additional support and give it additional financial protection. And the first sort of subpoint, or the first reason why this is the case, is because agricultural prices in general are thought to be more unstable than the prices of other goods. So that the price for a particular commodity or a particular crop on the open market can fluctuate very widely, and can be based on a number of factors that aren't under the control of farmers, of the producers, or even of the consumers. So that, for instance, if a hurricane hits in a particular area that's producing bananas or oranges, or if there's a really harsh winter in an area that somehow, I'm revealing my lack of scientific knowledge when it comes to agri-science right now, because I'm not sure that a harsh winter would matter that much. But if there's a lot of hail or thunderstorms, for instance, in the rural Midwest or in other corn-producing regions, and the crop gets wiped out, then that's going to obviously have a tremendous effect on the prices for those particular goods. So that the next day, the price of corn coming out of that sort of hail inflicted area, or the price of oranges or bananas, coming out of where the hurricane hit, they're going to skyrocket on the domestic markets and most likely on the global markets as well. And those types of conditions, the weather-related disasters, the susceptibility of different agricultural products to that kind of damage, you just don't find that as much in other industries, or at least that's the argument. So that obviously things can go wrong in the manufacturing industry or in the service industry, and particularly due to more poor management, a particular service or industry that's doing well one day, the next day can just sort of go belly up. But with farmers and agricultural products, it's a question of if you have a really good summer, a really stable climate, or if a series of natural disasters hit. And that's the sort of conditions that other industries don't have to deal with. And because of that, maybe the state should offer a little bit extra protection. And related to that point, because the prices are so unstable, because they are based on these sorts of unknowns, there's a lot more potential for fluctuation, which any economist or any public servant working with the market can tell you that's a bad thing in general, that what you want is predictability. You want to have a general idea about where the prices for different goods and products are going to be from one day to the next. And absent that sort of predictability, you run the risk of a whole number of possibly negative economic implications from rampant inflation, possibly deflation in some situations, to just a loss of investor confidence in general. So stable prices are important for consumers, for keeping an economy going, keeping production stable, and they're important for the overall economy. And so here you have some cornerstone products, being agricultural products, which are more prone to sorts of disasters that can lead to wild fluctuations in different prices. Meaning that not only should maybe the state step in and protect agriculture a little bit more, but they should try and provide some sort of stability mechanisms for actual prices, so that you don't run the risk of some of those more negative economic consequences that come out of it. Another sort of related point, and this is particularly salient to Europe, is that many argue that food is too important to risk having to rely on other countries or to rely on imports in order to provide it for yourself. Right? So this is clearly a situation like any other economy, especially today. Every country is going to try and specialize in different products or goods or services in which they have some sort of natural advantage. And we see that in agriculture more than anything, so that countries that have certain climates that allow them to produce a type of agricultural good at a higher quality or at a higher quantity are going to focus on that good as a way of sort of establishing a niche in the marketplace. We see that in manufacturing as well, where technology is one thing, for instance, where a country will try and get a running jump or a head start in a particular the development of a particular technological good, so that they can make their name on that, they can establish their dominance in that, and sort of make that the niche that they rely on in the sector. And the result of this type of specialization is that when you direct more of your resources, or when the state directs more of the economy's resources toward the production of a particular good, it needs to import other goods that the public requires, that the country requires from other countries, right? So this is sort of a neoliberal position about economic interdependence, that it's better for everyone if we see specialization in different goods, and we see trade between countries as a way of filling holes that aren't being met in countries that have decided to specialize in one good over another. So Greece, for instance, because they make a lot of olives, and they're pretty heavy in wines as well, aren't necessarily producing as many fruits and vegetables. That doesn't mean that Greek people don't need that. That just means that they've chosen to stake out a particular good within the marketplace. But given that the people will need fruits and vegetables, that means they'll have to import them from elsewhere. Well, as the argument goes, food in itself is something that a country doesn't want to expose itself too much to potential rivals in the future. Um, and this really dates to memories about what happened prior to World War II, whereby there were food shortages all over Germany and really all over Europe. And that precipitated a lot of the political catastrophes that came about. Um, and so countries argue, well, things are good now with our neighbors, but if they ever get bad, we don't want to be in a situation where we're relying on them for corn, for potatoes, for meat, for milk, for water, for the things that our people will need just to survive. Because if they decide to stop selling that to us because we're no longer allies, and our people don't have access to those goods, we're going to see food shortages, or we're going to see all the sorts of horrible things that come along with that. So as a result, the argument is that countries should do more to protect themselves. Maybe shouldn't open themselves up to the same risks that come with international trade, because this is a little bit riskier product, right? If you have an alliance that goes bad, and so your partner stops selling you laptop computers, that's really not going to affect your citizens as much as if they stop selling you food. And then there's also this idea that there are several social and environmental reasons to focus on agriculture. One is a very traditional idea, but something that within political science and the study of comparative politics dates back some time, which is that rural farming communities really serve as the moral backbone of society. That farmers and the families that they create produce the sort of um, leaders of rural society, engender the sorts of norms that we would want a population to model. Um, you know, I'm not saying that I agree with this argument, and certainly it's one that's still made today in the United States and in Europe. But the idea is that it's the farming family is too important to a country's sense of self, and so it needs to be supported for that reason alone. Um, there's also an argument that agriculture in particular poses a unique threat to the environment, because obviously agriculture entails how we use our land and what we're putting into our land and how we use our water supply. And that we can't stop it, obviously, because we need to produce food in order to supply a population. Uh, but it does entail the state probably needing to look a little closer at the different farming practices that are going on in order to protect the environment. Um, so those are some reasons. There's some additional, more pragmatic explanations for why agriculture has assumed such primacy within the EU, and probably more broadly within the United States and other countries. And these are more attempts to explain why it is rather than to provide justifications. Right. So scholars who have focused on explaining why agriculture is so important, in some cases have argued that it should be, and those were some of the points we just talked about. And in other cases have sought to simply observe and explain what's going on the ground and why this is the case. And so probably the best explanation is that farmers themselves are very politically powerful, that they hold a lot of sway over elected leaders because people listen to them. So they have electoral strength. They can, in some places, and at sometimes maybe even sway elections because they are community leaders. They are out there, stating what's good for the local economy and who they think is going to be best for a local community, and people tend to listen to them. More than that, and especially within Europe, I think much more so in Europe than in the United States, they've been very well organized and very strategically savvy. So that whenever COPA, the farmers' union, or the farmers themselves have detected that maybe the EU's taking action that farmers wouldn't like, they're very quick to respond. They mobilize the media so that their response is well covered, and they're very clever in how they try and disrupt things in order to get attention. Probably the most popular tactic is that whenever the European Union is considering a cut to agriculture subsidies, COPA will oftentimes mobilize farmers within Belgium and France and the surrounding area and actually have them drive their tractors into Brussels to clog traffic. This has happened at least 2 or 3 times. It gets a ton of media attention. It obviously disturbs a lot of the bureaucrats working in Brussels because, believe it or not, a lot of people do drive there, even though it's a heavily congested city. And it really paralyzes the local economy because these tractors come in on these major highways and thoroughfares going into Brussels and within Brussels themselves, and then sort of more or less just plant themselves and sit still. And the police can't come in and really get them out of there. I mean, obviously it's a tractor, so the farmer's got to move it, and that's the only way. You arrest the farmer, you might have more trouble getting it out of there than if you just appease the farmer. So they stage these protests usually for a day at a time, and they get a lot of attention. And there's some sense that maybe they've been effective in accomplishing what they want because of it. They brought their cows into the main area. I wish they would do that in Brussels too. I'm not sure how many cows they have there, but yeah, it is very effective. COPA is also very well funded. As we're going to see in a second, farmers are very wealthy, and they understand how important COPA has been to their financial well-being, and so they've given a lot of money to that group. They have established contacts with elected officials. The people that are elected or appointed to come to Brussels are aware of all this. They know they're well-funded. They know they're well-organized. And so they maintain contacts with the high-ranking leaders within COPA. And those contacts are important because if the farm lobby wants to make sure that they keep getting what they want, they can sort of monitor what ideas are coming down the pipeway and maybe even stop them before they're considered as actual proposals. COPA is similar to, it is a union in effect. I mean, it kind of blends a union with an interest group. I mean, it's very much trying to influence agricultural policy more broadly. So it's not just petitioning for the rights or the well-being of farmers, which would be the members of the union. It's also sort of asserting a broader influence on agricultural policy. So it kind of blends characteristics of both a union and an interest group in that effect. One being representing a specific constituency, and the second being actually trying to have a broader impact on policy. But before it is an interest group, it is a union. I mean, it is created, its leaders are elected to protect the interests of farmers within the EU. And then finally, farmers probably have the electoral strength they do because there's simply no strong political opposition to them. There is no anti-agricultural lobby. And that may get back to that point about the fact that farmers are so important to the sort of moral backbone to society, this sort of traditional view. I mean, it's something we see in this country whenever a politician is brave enough to propose the elimination of ethanol subsidies. There's a massive outcry, certainly from the Great Plains states or from the Midwest, and there's a fair number of political opposition that's mobilized to them. And that's just one issue, which is subsidizing the production of corn for sort of gasoline. More broadly, it's unimaginable to think like other sorts of political or distribution type issues that we would see a group on the flip side opposing what's going on. Within Europe, agriculture policy has been so central because it's been key to the EU's legitimacy. This is something we talked about last week, how the EU is sort of confronting all these problems with democracy, how there's a lot of skepticism about democratic processes at the EU level. And from the point of view of the EU institutions themselves, this is really a question of legitimacy. In their minds, it's not necessarily that they're doing anything wrong or that they need to be more democratic, but that the people have doubts. The people haven't fully placed their trust within the institutions. And so to that effect, the EU institutions have really focused on trying to create natural constituencies, people that have automatic buy-in to the European Union. And that's really modeled on CAP and agricultural policy, because probably the strongest group of EU supporters have been farmers since the 60s. Farmers don't resent that the EU is the one that is paying their bills, that's giving them their subsidies, or that the EU is the one that's regulating this policy, because they've made out pretty well from it all. And they don't just exert political pressure at the European level, they also do it at the national level. So there's been a fair amount of research that indicates even that in terms of getting the leaders of certain member states at the national level behind support for further integration, farmers have been key. They continue to put enormous political pressure on their local and national leaders to support the sort of transfer of authority up to the EU. So they're very much supportive of the European Union. The Commission, which is that executive of the EU, is very aware of that. They've played on that support in many quarters. And so obviously the EU is not going to let agricultural policy go away, and it's not going to take extreme or immediate action that's going to alienate those farmers. It has, over the last 30 years, sort of gone a direction that farmers don't prefer, but it hasn't had much choice. And while it's been doing that, it has still continued to support agriculture to a great extent. And that's because these are individuals that go out and say, no, the EU is a good thing, and make the case for European integration. More specifically, agriculture came about within the European Union. It's been important because it served French and German interests. And France and Germany are oftentimes called the engine of the European Union. It's their relationship and cooperation between those two countries that has sort of created and continued to spur the growth of the EU. And the common agriculture policy was one of the first sort of great compromises between these two countries. If you'll remember, the Treaty of Paris in 1957 established for the first time that these countries were going to try and create one single European market for all goods and services and capital. And agriculture was the first thing that they started to focus on, because France in particular wanted the European Union to start to tackle that issue. And that's because France was a very large agricultural community, and it saw the opportunities that might arise from having integrated agricultural markets. Germany, which isn't actually as agrarian-based as France. So as a percentage of the total German economy, agricultural goods are much smaller than in France. Germany didn't really care as much about having integrated agricultural policy. And so they weren't naturally going to go along with proposals for this to be the first area that was addressed after the Treaty of Paris. But France was insistent that if Germany wanted to eventually have an integrated market for industrial goods, for manufactured products, which is a much bigger percentage of the German market than it is the French market, that if Germany wanted that to happen eventually, that they needed to get behind agricultural integration now. So in the immediate aftermath of the Treaty of Paris in 1957, in the first few years into the early 1960s, that's when the EU started to sort of develop this agricultural policy. It was because that was France's preference, but it was France conditioning eventual integration in industrial areas to Germany. Okay, I want to very briefly outline some of the original objectives of the Common Agricultural Policy. These are actually specified within the EU treaty itself. They've changed a little bit over the years, but most of these are still within the current articulated objectives within the EU treaties. But the first was to increase agricultural productivity amongst European farmers by promoting technical development and the rational development of agricultural production, along with the optimal utilization of the factors of production, in particular labor. And what this is basically is agricultural regulation. The EU coming in and sort of making rules and laws about how particular agricultural products are made, how they're produced, how they're grown, with the idea that the EU can sort of pool scientific experience and expertise and come up with policies that are going to create the most agricultural goods with sort of the least negative drawbacks or consequences from that. Second, to ensure a fair standard of living for the agricultural community, in particular by increasing the individual earnings of persons engaged in agriculture. So right here, it's pretty clear from the start, we want to make sure farmers have money. And I think that's the number one idea that many people have associated with the agricultural policy over the years. Third, to stabilize markets, and again, this gets back to the fact that agricultural goods in general are susceptible to more instability, and that could have larger market ramifications. To ensure availability of supplies, so again, that's a matter of we need to shore up the food supply within our borders. We don't want to be dependent on imports, because if things ever go sour with any of our allies in this region or even around the world, then we won't be able to depend on them. And finally, and it does come last on the list, to ensure that supplies reach consumers at reasonable prices. And I think a lot of European consumers would argue that this has not been the case, and it hasn't been the case for some years. Food tends to be pretty expensive over there. It varies some by country to country, but I think in general, and obviously some of you have been there, and if you've been to the grocery store, you'll have an idea of this, but I think in general, a lot of agricultural goods there are more expensive than what they are here in the United States. There are maybe some that are a little bit cheaper, but prices are higher there, and they're higher by design, as we're gonna talk about here. So talking a little about the historical development of the CAP, in the early years, so we're talking the late 50s, early 60s here, the entire focus of the European Union, and this is specifically actually the European Commission executive, was on controlling prices of agricultural goods. And they had three sorts of mechanisms that they used to mandate what prices of different goods were on the market. The first are what they called target prices. These were set every year by experts within the Commission. And these are what were considered to be the desired prices for agricultural products on the open market. Right, so we want corn to sell for 25 euro a bushel, as an example. I'm not sure if that's a good price or a bad price, actually, but as an example, going into a particular period of agricultural products being for sale in the market, they would set what their desired goal is based on prevailing market conditions, based on what they think is going on in other parts of the world, and what they think farmers can get for the goods, and what they want farmers to get to ensure that, again, farmers have a reasonably high standard of living. These prices were then meant to be the guideposts for European agricultural markets. So they would issue them. Obviously, they wouldn't require that goods be sold at those prices, but everyone working on the market to buy and sell agricultural products were cognizant that this is what the Commission wanted to reach. Farmers were cognizant that this is what the Commission wanted to reach. And so this target price going into any sort of season was sort of always in the background and would condition the behavior of all the actors involved. Generally, the target prices set by the Commission were much higher than the same goods produced in other parts of the world. So they were setting them higher. And again, that's that edict that farmers should have a certain standard of living. Threshold prices were a little bit different. The threshold prices involve the Commission being a little bit more active. And it's not just the Commission saying what they want to happen, it's the Commission saying what's going to dictate their actual behavior within the market itself. So that was the minimum price that imported agricultural goods could be sold for in the EU market. And it was certainly related to target prices, right? So let's say that the Commission sets $25 a bushel as the price that they want farmers to get for the corn. And they do that knowing that American farmers can get $15 or will sell their corn for $15 a bushel. And that right there is a sign that even with the standard tariffs, American products are going to undercut European products within Europe itself. As long as American farmers can get that corn over to Europe, they're going to sell it for almost half the price, and consumers are going to buy the American corn before they will the European corn. What the threshold price signals then is the exact value of the tariffs taxes and levies that the European Union will impose on American goods or goods from other non-European countries when they're coming into the European market, right? So farmers are coming in with the intention of selling their corn at $15 a bushel versus the 25 that European farmers are trying to get. The commission is going to try and figure out a formula whereby the taxes and tariffs equal $10 a bushel, so that the price of those goods have to be raised, and they're therefore then less competitive against the European goods. And in fact, target prices and threshold prices are not the same, right? Because the commission's intention was actually to make non-European goods less competitive than the European ones. So if their target price was $25 for European-produced bushel of corn, then they're probably actually going to try and get the non-European bushel up to like 30 or 35, so that everyone will buy the European products first within the European market. In some ways, it's pretty dirty practice. I mean, to be honest, though, it's something virtually every country does to one degree or another, and the United States is just as guilty of this sort of general practice. It's something that organizations like the World Trade Organization, really the EU, were designed to eliminate, and so it's a practice that over time is getting better. But if we're talking back in the late 50s and early 60s, it was pretty commonplace. The EU is probably just a little bit more aggressive about it than anyone had seen prior to that. All right, and then finally there are what we call intervention prices. And these are the prices at which the Commission will actually step in and buy any agricultural surplus. Again, intervention prices are not set by target prices. So even if the target price is $25 a bushel, that's what we want the European farmers to get, or 25 euros a bushel. The Commission isn't going to buy any excess good at exactly that price. But if farmers have 100 bushels and they're only able to sell, say, 60 of those, so they have 40 remaining, they're looking at taking a loss on that because they can't sell it, either because there's not the demand or because their prices are too high. The Commission will step and say, well, our intervention price for this is, say, $18 or euros a bushel. So it's a little less than what we've set our target price at, but it's also more than what farmers in other parts of the world are getting for the same thing. And then that additional 40 bushels that are laying there that the farmer has that they haven't been able to sell, the European Union actually buys that from them for this set price. And the farmer can walk away not having anything on hand and essentially having gotten paid for everything that they produced in that year. Well, obviously, and I'm sure many of you have thought of some of these as I've been talking about this, but there were several disadvantages to this strategy. And the first is that there was simply unusable surpluses that the European Union then housed. And this is a problem that oftentimes is referred to and that you'll see is the EU having lakes of wine and mountains of butter. I don't know why I have mountains of water here. Should be mountains of butter. Sorry about that. Because farmers had an incentive to produce absolutely as much as they could. In an economy where there isn't that sort of support, if a farmer goes out and invests in the seed to overproduce, if they invest in the manual labor that's required to overproduce, so that they really know realistically they're probably only going to be able to sell 70 bushels of corn, say, but they go out and they produce 200 bushels using different practices, they're going to take a loss if there's no state support because they're producing 130 bushels beyond what they know they can sell, and they're having to pay for the seed, they're having to pay for the labor, they're probably having to pay certain expenses and equipment to get that out there. In Europe, however, in the European Union, when CAP was first implemented, there was no such worry. Farmers didn't have to be cognizant of what the demands of the market would be, because if they had that 150 extra bushels, they knew that they were guaranteed a pretty good price from the European Union for it. So why try and temper any sort of production? And that gave them every incentive to try and maximize production as much as they could. And they did. And the farmers made out pretty well from it. The EU, on the other hand, in addition to paying out quite a bit because of it, had all this excess surplus on hand. Most of it never got used from year to year, sort of went rotten, just sort of sitting around in storage facilities. Some of it was dumped in other markets, particularly Africa, and many African countries ended up being a proven dumping ground for these EU products. But certainly the products themselves were a problem. And if you think about it, it's costly beyond just having to pay for those products, the EU had to pay for a way to store them or transport them to other areas to try and get rid of them. So this was a huge problem in Europe, and one that was, I think, acknowledged by everyone involved. Obviously, it substantially increased agricultural expenses, and that's part of the reason why CAP was such an enormous percentage of the EU budget as a whole. Um, and at the end of the day, there's been a lot of argumentation that it really hurts European economies and European agriculture in particular because they weren't as competitive in the regional and the global markets. The farmers didn't have the incentives to develop better products or try to develop more sustainable practices because they were paid out pretty handsomely for just going out and producing as much as they could. So along with the fact that obviously then European products cost more because of the artificially high prices that were being set by the Commission. So no one wanted to buy them because they were just simply more expensive. These types of policies continued largely unchanged until about the mid-1980s. And that's when there started to be calls for reforms, more serious calls for reforms. I think it was a problem that many people had been remarking on and talking about for some years, but there weren't serious calls for reforms until around the time that Jacques Delors came into the Commission as the president, and the EU started looking at creating a new treaty with the Single European Act. But by the 1990s, there was certainly significant support. And beyond the fact that there were these obvious large disadvantages, probably the best explanation for why reform all of a sudden happened in the 90s was that's when you started to see a lot more new EU member states who were not agrarian based. Right? So you had a lot more countries in the EU than you did in the late 60s. These countries were paying into the EU budget, so they were joining the EU, and upon joining, were paying for agricultural policy. But many of them weren't very agricultural dependent, and therefore were more or less subsidizing French farmers, or that's the general critique. And Great Britain is the best example of this. And Great Britain has been fighting against CAP almost since the moment it joined the European Union. So in the 1990s, then we start to see certain reforms being proposed. And the big ones toward addressing this over surplus of goods were the introduction of quotas and price stabilizers. It wasn't really changing course. The EU was keeping with the same general strategy of addressing prices of goods, but it was trying to correct this surplus problem. And so what the EU did was more or less establish that it would pay the intervention price, right? When it comes in and says, all right, whatever your excess surplus is, we'll pay $18 a bushel for that. With these reforms in the early 1990s, the EU said, we will only pay for a certain quantity of that, right? So if you have 30 extra bushels, we will pay for those at the intervention price. If you have anything beyond that, you're on your own. So again, that starts to try and address the incentive that farmers had to maximize production as much as possible. I mean, almost at the same time, I think it was actually a couple years later, then they introduced this idea of price disincentives, whereby they'd say, okay, we're going to only buy 30 additional bushels that you're not able to sell. And then if you go beyond that, we're actually going to lower the price that you get for those initial 30 bushels. So they sort of kept trying to amplify the disincentives that farmers had to overproduce. They also progressively were lowering both the threshold prices. They were lowering all of them. They're lowering target prices, threshold prices, and intervention prices. So on target prices, from the outset, they were basically saying instead of $25 a bushel, we really only expect our farmers to get about 21 or 22. So trying to alter the mindset going into a particular season. Intervention prices were dramatically lowered, and that was due largely to global pressure. So this is round about when the WTO and the United States started to apply enormous international pressure on the EU to come into compliance with sort of accepted standards for international trade. And everyone was saying you basically can't try and artificially rise American prices or Chinese prices or African prices to something that's twice what the European farmer is charging. And the EU did respond to that and started lowering these intervention prices throughout the 90s. And then they made them subject to much more stringent reviews. So it became less more blatantly based on the interests of European farmers and much more subject to sort of what was hoped to be an objective review of what global conditions were and how those related to European conditions. And then obviously they were lowering intervention prices. They simply weren't paying as much for the excess surplus. Um, and it was around about the same time, and again, between the Single European Act, the Treaty of the European Union, that they introduced an idea that has become more or less the core of CAP today, which is that they were going to actually pay farmers for how they used their land. And in the early 1990s, what they were doing was paying out financial incentives for farmers who took their land out of production. Right, so a particular farmer could keep some of their land in production and make what they needed or what they wanted to off the crops from that, and then they could sort of rent out maybe 20 or 30% of the rest of their land to the EU, get a little bit extra income out of doing that. And from the point of view of the EU, they're making sure that there's not this sort of over surplus coming out of European farmers. Going into the last decade, we saw further movement in CAP, so that there's been continued political pressure within the EU on the part of smaller EU member states and the part of non-agrarian countries to spend less. I think a lot of people question the specifics of CAP policy itself, but the biggest concern is that there's just too much being spent on it. And there, particularly in the early part of the 2000s, there was a lot of anxiety about Eastern enlargement, right? Because they had 10 Central and East European countries that were getting ready to join the EU. Many of these were very large agricultural economies. And if the EU subsidized Polish farmers and Czech farmers and Hungarian farmers at the same rates that they were French farmers and German farmers and Spanish farmers, then they were probably going to risk going broke. So, and certainly the sorts of surpluses that were endemic of the European Union in the 1960s and the 70s were going to grow even exponentially larger. And so, people realized that with more agrarian economies coming in, and therefore, because they were EU members, they were entitled to the same sorts of subsidies and policies, that you had to have sort of a major significant reform to CAP. Oh, okay, sorry. They didn't do anything with the land for the most part. They've become much more practical about that today. I want to talk about this in a minute, so that they, rather than renting out, basically paying a farmer not to use their land, today they pay their farmer to use their land for alternate purposes. So today they try and actually get farmers to develop alternate businesses on their land, maybe sort of tourist enterprises, the things where you go out and visit a farm and you get to see part of how it's done. In Germany in particular, there's a lot of emphasis on using agricultural land for environmental purposes, so they're setting up sort of solar farms and wind farms to gather energy. Any sorts of these alternative uses of land, that's what they're subsidizing now. Back then, they weren't subsidizing land to be used for any particular use. They just wanted the land to get out of production so they didn't have these enormous surpluses at the end of the day. Okay, so going into the last decade then, and we see that there's this continuing push to sort of pull CAP back, to de-emphasize prices for goods, to spend less, and to ensure that there's fewer surpluses. And that led into what was called Agenda 2000, which is probably the most significant reform to CAP since it was created. And what Agenda 2000 did was divided CAP into two pillars. The first was production support, and what we meant by this was what had previously been the sort of threshold prices, intervention prices, and target prices. And the second was rural development. So this trying to ensure more sustainable, more efficient production processes. And within that first pillar, there were further price cuts, meaning that the EU, in fact, it was really with Agenda 2000 that the EU began to completely move away from the strategy of trying to set prices for particular goods. And it began by simply lowering the prices even further, so that intervention prices were lowered to more or less what they would have been on global markets. Right? The EU wasn't trying to inflate the price of American goods or Chinese goods any more than, or much more than than they would have been had they been sold in America or in China. Certainly, they further cut intervention prices, so they were paying out even less to farmers. And they cut the number of goods that were eligible. So they were no longer stepping in and buying excess in certain types of agricultural goods. And that's what they've continued to do since Agenda 2000, is sort of narrow the list of goods that are eligible for these types of price supports. And the second part then was a shift to sort of directly subsidizing farmers. Right, so they haven't taken away this objective of ensuring a certain standard of living for the farming community. That remains in there, and that's probably COPA's influence. Right, remember there's COPA, there's that powerful farming lobby. They're not just going to let their farmers go broke, so to speak, or go without a certain income in any given year. So the EU can't abandon this idea of subsidizing farmers, but what it did do was try and move away from, rather than subsidizing the particular goods that the farmers are making, we're going to try and make direct payments to those farmers. They get sort of a set grant, and that's it. And there was a balance between this. As I said, they were phasing out price supports. They were lowering the prices they give. They were phasing out products that were eligible for it, even as they were moving toward this system of direct support. And initially, the subsidies weren't necessarily contingent on anything. Eventually, what CAP would do is make the sort of direct payments to farmers conditioned on compliance with certain types of new rules and regulations. And that's all related to the rural development aspect, which we'll talk about in a second. So that today, for instance, if you want those direct subsidies, you're going to get more of them if you're into organic farming, because the EU's made organic agriculture a priority. You're going to get more if you demonstrate that you're in compliance with certain environmental standards, with food safety standards, with animal protection standards. You sort of have to pass those tests as a condition for the EU subsidies. Today it's no longer even just that check that you get in the mail. But that was what they were trying to phase into when they began this back in Agenda 2000. Rural development then involves diversification. So what we just talked about a moment ago, taking land out of agricultural production and trying to make it to convince farmers to use it for other purposes. Support for younger farmers. So we sort of see a generational turnaround in these countries. And along with that, support for smaller farmers too, because it was around about this time period that the EU started to be criticized for supporting largely corporate operations, the big, massive, multi-million-dollar farms. The United States Department of Agriculture is criticized for the same thing today. EU is still criticized for that. But they did try and address that critique by putting in more specific initiatives that were designed to provide disproportionate support to younger and smaller farming enterprises. And incidentally, gosh, I can't remember what I was going to say incidentally now. Oh, incidentally, COPA, that farming union, it also is heavily criticized for supporting largely multi-million-dollar agricultural industry, the agriculture industry. Sorry, so COPA really is in the pocket of big farmers, and it's really their interest that it serves, and it has drawn criticism for that. Okay, 2003 then was when we started to see much more explicit decoupling, so that payments to farmers were based on the size of their land, what they were using their land for, being in compliance with certain laws, and not on the number of crop and type of crops that they were producing. Today, as a result of a lot of these reforms, what we see is that there's less money being spent on CAP as a percentage of the EU budget. I do think it's now down to about 30 to 35%, which is less than half as a percentage of the budget than it was about 30 years ago. Obviously, there's almost no focus on prices anymore. I think there are still 3 goods today that are eligible to receive direct price supports, and wheat is one of those. And they're all crops that are considered to be sort of primary importance. Most other crops don't receive any sort of direct price support. What happens then is the farmers that are growing those crops receive direct support from the European Union. And there's a lot more emphasis on rural development. And this is tied into EU budget policy. The second largest percentage of the EU budget is spent on what's called cohesion funds. And the cohesion funds are meant to sort of subsidize developing parts of Europe in order to try and create a more equal economy across Europe. So cohesion funds, for instance, will go into rural areas in Eastern Europe that aren't as developed and provide money for building roads, for putting in internet broadband, for sort of building up basic infrastructure. And there's really a synergy between regional policy and ag policy today, because ag policy or CAP has its own component that's meant at developing infrastructure on farms. So they will subsidize green technologies being developed by agribusiness, and then they'll subsidize the use of green technologies on individual farms, and that ties into the sort of larger rural development objectives of the EU. Some of the critiques we've talked about as we've gone along, but CAP has oftentimes been critiqued as being unfair to the developing world because third world farmers obviously don't have the support of any sort of state subsidies, particularly in Africa, which has on one hand been sort of identified as an EU partner in agriculture, and on the other hand has had to compete with substantially subsidized European products with almost no support at all. So it puts farmers in third world countries that are already at a disadvantage in a place where they really can't compete in any respect whatsoever. And as I talked about in the past, there was frequently dumping, so that if the EU had to buy something like, a million bushels of corn or an excess of such a product that they couldn't hope to get rid of it in 10 years, that's when they would take it down to, say, Northern Africa or even to Central or Southern Africa and unload it in the African market at incredibly low prices, undercutting the prices of the locally produced goods. That's something that doesn't happen today, but it did happen for a long time. And obviously, that puts local farmers in those areas in a position where they can't even sell to their own neighbors. Oversupply and price instability as a result of oversupply have both been sharply criticized. Environmental problems, that's something that the EU's really tried to address over the last 20 years. But certainly prior to that, there was almost no emphasis on organic farming. And there was a lot of sort of broader attention shown on the fact that on one hand, the EU had a very vibrant and thriving environmental policy that had sort of these lofty goals and objectives for creating a sustainable economy and preserving the European environment. And on the other hand, farmers were using a lot of environmentally unsound methods and weren't subject to much regulation or control. Obviously, unequal distribution of EU funds. A lot of the smaller EU member states, a lot of the non-agrarian member states resent the fact that they're paying in significant amounts of money that are then going out to farmers in other countries. And the United Kingdom, as I said, is the one that has objected the most to this. And the UK actually negotiated back in the 90s what has become known as the UK rebate, whereby it actually pays less into the EU as a percentage of what it should pay in than every other member state. It basically said, look, we're not going to support certain treaty reforms if you make us continue to pay in so much when we're only getting a small percentage of that back. And so they adjusted the formula for how each member state pays in so the UK doesn't have to give as much as it was expected to. And that's always been tied to ag policy. And the UK itself has tied it to ag policy because it said that part of why it doesn't want to pay in is it doesn't have a very large agricultural sector. And British farmers aren't getting all that much out of CAP relative to French farmers. The UK rebate itself has then become a controversy, obviously, because every other country, whether they're getting agricultural funds or not, resent that the UK is given this sort of special exception. We've talked about how there's a tendency to favor large and corporate farms. And then more broadly, the EU is, as we discussed last week, is really a project about creating a single market, and in doing that, eliminating trade barriers. Taking the state out of the market, allowing the free flow of goods across European borders. And so the CAP is really kind of strange within that because it is, at its essence, substantial market intervention. It's the EU, going to great lengths to make their products more competitive than those produced in other countries and other parts of the world, or that's what it used to be, right? And so they're stepping in and introducing levies and customs duties to do that, and it's sort of a disjointed approach to how you have the state interact with the economy. Okay, so we don't have quite as much time as I'd hoped for questions, but certainly if there are any questions or any issues that you would like to raise about ag policy or about any other policy area within the EU, I'm more than happy to address those. I'm gonna put my email address up here again too, so that if you want these slides or you want the slides from either of the other two webinars, I'm more than happy to send those out to you. Okay, any other questions? I mean, well, there aren't any questions so far. Well, I guess we're at time for the webinar anyway. So certainly I appreciate the opportunity to talk with both of you about ag policy, and you know, if you want the slides or if you have any other questions or any follow-up, I'm more than happy to hear them. If you would like me to talk to any of your students now or next year about any of this stuff, I'm also happy to do that as well. But okay, Polly's typing now. Okay, great, thank you. Well, have a good weekend, and thanks again for the opportunity to do this. I hope I hear from you in the future.